তো এখানে থেকে আমি একটা রিকোয়েস্ট করি যে ভালো কথা সেটা অনেক মানে ফ্যান্সি করলেন।
Welcome to this national webinar on COVID-19 pandemic and its impact on agriculture and insurance sector. Respected Principal of HPB Girls College, Dr. Bipul Chandra Bhuiya sir. Today's guest of honor, respected Principal of Majuli College, Kamalabari Majuli, Dr. Rajiv sir. Our honorable resource persons of today's webinar, Dr. V Suray Snyder from Hyderabad and Dr. Rajiv from Christ University, Bangalore. Our departmental head, Dr. Gokul Chandra Soikia. Our co-conveners, Dr. Brojan Chandra Neuk sir from Majuli College, Majuli, and Dr. Bipul Kumar Rabha from our college, that is HPB Girls College, and my dear participants. Now we are going to start today's webinar. The webinar will be started by the inaugural speech, which will be given by our respected principal Bipul Chandra Bhuiya sir. Now may I request Dr. Bhuiya sir to give his inaugural speech and formally inaugurate this webinar. Thank you.
Thank you, Dr. Hendik. Good morning to everyone present here. Respected guest of honor, Dr. Devojit Saikia, Principal, Majuli College, Kamalabari. Honorable resource persons, Dr. V Suray Snyder, Senior Faculty, Institute of Insurance and Risk Management, Hyderabad. Dr. Rajiv Sutradhar, Assistant Professor, Department of Economics, Christ University, Bangalore. IQAC Coordinator of HPB Girls College, Dr. Hendik. ASD of Economics, HPB Girls College, Dr. Gokul Chandra Soikia, and Rajan Vora, ASD of Majuli College. Dr. Brojan Neuk, Assistant Professor, Department of Economics, Majuli College. Dr. Bipul Kumar Rabha, Department of Economics, SPB Girls College. Members of the organizing committee, dear participants and students. It is my pleasure and a great privilege to welcome you all to this national webinar on COVID-19 pandemic and its impact on the agriculture and insurance sector, organized by IQAC, Department of Economics, HPB Girls College in association with the Department of Economics, Majuli College. Respected this assembly, I'd like to take the opportunity to speak a few words about our institution. Hemaprabha Borbora Girls College, Golaghat was established in the year 1969. In the process of establishing the college, a noble-minded donor, Let Alok Chandra Borbora, came forward and offered ₹75,000 in the glorious memory of his mother, late Hemaprabha Borbora. It has made significant strides in become one of the leading colleges in the district, imparting instruction in almost all the subjects at higher secondary, both arts and science and undergraduate levels, including major courses. The National Assessment and Accreditation Council visited the college in 2012 and accredited with high B grade. Govt in Higher Education Department, Assam has already approved HPB Girls College, Golaghat for opening science stream along with other 49 colleges of Assam. Moreover, there are some vocational courses like Diploma in Computer Application, Spoken English, Cutting and Tailoring, Food Processing and Food Preservation, Beauty Therapy and Hairdressing, Poultry Management and Entrepreneurship Development, etc. Postgraduate courses in Assamese, English, economics, education, political science, and sociology have been introduced under the Directorate of Open and Distance Learning, Dibrugarh University. Now the college is celebrating its golden jubilee year, and it becomes an outstanding temple of wisdom, fulfilling the hope and aspiration of its stakeholders. Attempt has been made to create employable human resource by developing skills, information process, efficiency, and introducing various training programs in the college. A lot of initiatives were taken up and implemented to enhance the quality of education and improvement of all facilities. Here, a student enters as a girl and steps out as a responsible and well-informed citizen of the country with self-confidence to face the world of challenges. Besides the infrastructural facilities, the strength of the college lies in its congenial and enriching atmosphere, which plays a crucial role in maintaining the excellent record and standard of the college. The college has organized many national and international seminars in the last few years. Moreover, we have a very dynamic and dedicated teaching staff, and they are inspiring our students for good performances in the examination and in all extracurricular activities. The college also organized many workshops for career counseling, psychological counseling, self-defense, cultural activities, and tried to improve the personality, capacity building, and mental strength of the students. Now I am going to speak a few words about this today's webinar. So, impact on agriculture due to COVID-19. The problem in agriculture is primarily related to the availability of labor and inability of access of the market for produce. Due to the problem of transportation and operation of market, after imposing lockdown, massive consequences to agriculture, livelihoods, and food security are feared, and therefore rapid action and reforms are urgently needed. COVID-19 pandemic outbreak is disrupting some activities in agriculture and supply chains. From the preliminary observation, it is seen that non-availability of migrant labor is interrupting most of the harvesting activities. Some measures are required to keep the agricultural sector and supply chain working smoothly. The government has imposed lockdown and issued guidelines exempting farmers' activities and supply of products. Due to lack of food supply, many people died in the lockdown period, which causes not for lack of food availability. The government should provide all necessary measures for the protection of the farmers by testing and practicing social distances. There should be continuity in assessing the market. The small poultry and dairy farmers need more targeted help as their pandemic-related output, supply, and market access problems. The farmers and agricultural work should be included in government assistance package with social protection. Since lockdown measures have been increased, the government are taking necessary steps for home delivery and of the groceries and e-commerce. So we think that this process should be encouraged and promoted. The government of India has quickly responded to the crisis and announced some relief packages, which includes food and cash transfers, and some state government have also announced their own support packages. The central government also declared a relief package called Pradhan Mantri Garib Kalyan Yojana for providing help to those hit hardest by the COVID-19 lockdown. But it is not enough in compared to the large scale of the problem. And in case of insurance, I want to speak a few words. The insurance industry is generally well prepared for the major loss of events, including pandemic, but the financial impacts will take some more time to play out. Insurers are responding to the COVID-19 outbreak on multiple fronts as claimed. Payers, employees, and investment managers each has its own distinct challenges on not only for the insurance but also for the global economy and society at large. So falling equity in markets and interest rates would put pressure on insurers balance sheet, live product profitability, and investment management fields related to the savings products. We have already invited one resource person for this insurance. So I think he will deliver a good lecture, including all these things. So I don't want to speak more about this. Now I think that this webinar will fulfill the hope and aspiration of the participants, organizers, and I wish a grand success of the webinar. And with this few words, I declare this webinar open. Thank you very much.
Thank you, Principal Bhuya sir, for your introductory speech. We are very much fortunate that this webinar is a joint venture of two colleges of Upper Assam, which belongs to the which is affiliated under Dibrugarh University, that is HPB Girls College Golaghat and Majuli College Majuli. We are very much fortunate that we have among us Dr. Devojit Choikia sir, Honorable Principal of Majuli College. Sir is present as a guest of honor of this webinar. I request Dr. Choikia sir to say a few words to the participants. Choikia sir, mic is yours.
Yes. I am here.
Yes.
Am I audible? Am I audible?
Yes, sir.
Okay. Very respected inaugurator of this webinar, more অতি শ্ৰদ্ধাৰ শিক্ষাগুৰু যিজনে মোক এইখন মহাবিদ্যালয়ত পঢ়ুৱাইছিল, the very person, Dr. V Suray, the principal of HPB Girls College, respected resource persons, Dr. Nayak and Dr. Sutra, three very dear coordinators, all are familiar to me, respected and dear participant friends attending from various corners, different parts of the country. First of all, I gratefully extend my greetings and thankfulness to all associated with organizing a national level webinar on the topic, the impact of pandemic COVID-19 on agriculture and insurance sector, a very, very relevant topic in view of the great impact of the pandemic in our society. As we all know that the reduction of food grains production arising out of nationwide lockdown because of COVID-19 results in huge and income loss of the farmers. Today in India, as we know, that around 69% of the people are living in the rural areas, and the agriculture and its allied activities are the major source of the livelihood of the rural persons. In this situation, the pandemic creates the heavy risk on their livelihood and life as well. This will definitely create problem in respect of the food security of the nation as a whole. Similarly, the pandemic will have a great impact on the profitability of the insurance sector because of the probable increase in claims and policy liabilities. I do hope today's webinar will be successful in discussing all such matters and help the policymakers to formulate policies for fighting against such situation. With these few words, I would like to conclude, and I am offering my thankfulness, gratitude to all the participants, particularly principal of the HPB Girls College, coordinators, and organizing committee of the webinar for organizing such a relevant webinar today, and hope this webinar will be a great success. Thank you.
Thank you, Dr. Debojit Choikia, sir. Your inspiring word means a lot for us. We hope in near future also we'll collaborate and make some other activities jointly. Now we are going to start our technical sessions. In this today's webinar, there will be two technical sessions, and the first technical sessions will be conducted by Dr. Suray Snyder. Before starting his presentation, I request Dr. Bipul Kumar Rabha, Assistant Professor as well as Assistant Professor, Department of Economics, HPB Girls College, as well as one of the coordinator of this today's webinar, to formally introduce our honorable resource person, Dr. Suray Snyder, sir. Dr. Rabha, mic is yours.
Okay, thank you, Pulak sir. Am I audible, Pulak sir?
Yes, you can continue.
Okay. Respected Principal Sir, SPB Girls College, and respected Principal Sir of Majuli College, and my dear colleagues, and respected resource person, it is my great privilege to introduce Dr. V Suray Snyder, sir. Dr. V Suray Snyder did his post-graduation in Mysore University. He received his MPhil degree from Center for Development Studies, Trivandrum, Kerala. As we all know, it is affiliated to Jawaharlal Nehru University, that means JNU. He received his postdoctorate award from Department of Economics, University of Hyderabad. He worked in the Central University of Karnataka. Then after that, he also worked in ICFAI Business School, Hyderabad. In short, IBS Hyderabad. Presently, he is a senior faculty in Institute of Insurance and Risk Management, Hyderabad. His area of interest includes banking, finance, and insurance. Today, he will be talking about impact of COVID-19 pandemic on insurance sector. So, I request Dr. Suray Snyder, sir, to deliver his lecture. Suray Snyder, sir, over to you.
Dr. Nayak, sir. Nayak, sir. Please unmute yourself, sir. Please unmute yourself, sir.
Please unmute. Nayak, sir. Your mic is on mute mode. Unmute, please. Suresh Nayak sir, voice is not coming. Unmute, please. Maybe some problems going on. Let me call him.
Hello?
Hello?
Yeah.
Okay, people. People, can you hear me?
Yes, yes, sir.
You can hear me?
Yeah.
Okay. 1 minute before, just I upload my PPTs, and I'm extremely sorry for because of technical, we are getting problem. Very good morning to all. Hello.
Yeah.
People, can you?
Yeah.
Okay.
Go on, please.
Very good morning. Very good morning to all. And we know that the present situation, that is what impact of COVID-19, which has been created imbalance in the system, and one of the Hello, can you hear me?
Yeah, we are hearing, but the sound is slight low. The voice is coming low.
Low.
Yeah.
Okay, give me this time. Now?
Yeah, it's okay now.
Okay, it's getting echo, that's why I'm very much. Okay, thank you very much for giving me this opportunity to talk regarding the impact of COVID-19 on the insurance sector. As we know that today the world economy is suffering very badly because of this impact of COVID-19. If you see the data across the world, all the major countries of the developed countries are facing lots of problem with respect to the present situation. If you see, this is where it has created a lot of imbalance in the system, and also it is creating a lot of trade impact, economical impact. The GDPs are coming down across the countries, and because of this happening across the country.
Excuse me, sir.
To the others.
Excuse me, sir. Suresh sir.
Oh.
Hello, excuse me, sir.
Hello. Hello. Hello, can you hear me?
Yeah.
Hello.
Hello.
Bipul,
Yeah,
sorry.
but slight
Okay.
louder you can speak. The voice is breaking actually.
Okay. This is because of some network issues happening from the morning.
Rabha, microphone to khuli lobole kobo নহলে diggar hole.
Maybe the microphone is creating problem, I think.
let me change the microphone. Can you hear me?
Yeah, yeah.
Hello?
Yeah.
Hello, Vipul?
Yeah.
Hello,
Yeah.
can you hear me?
Yeah. We can hear.
Fine. I'm not able to reach properly with you. As I said that as I said that the world economy is suffering because of this pandemic, and India is among the 15 economies which affected, created lot of growth. As the insurance sector is a very growth. So if you see that
Yes, Suresh sir, voice
on
is
the
not clear.
economy, it is yes,
Voice is not clear.
now
Can you take your microphone near to your mouth? Can you take the microphone near
yeah,
to your mouth?
now you can hear me. Now you can hear me.
Yeah. Oh, that is enough.
Hello.
That's good.
Okay, fine. So as I told that it has it has impacted to the Indian economy. As such, the insurance sector plays a very important role in terms of economic development and growth of your economy. If I assume that when I say that introduction to the insurance sector, the Indian insurance industry comprises of 58 insurance companies. 24 are life insurance companies, and 34 are non-life insurance companies, and one is the reinsurance companies. Among these companies, the even this industry has grown of time, has created of business, employment opportunity. If you see in terms of the in terms of premium by life is it is from 2.5 that is to around 7 billion in the 2020. This tremendous increase has happened in Indian insurance. Give the insurance and the GDP, which is the percentage of in 2.1 in 3.
Suresh sir, voice is not clear. Hello.
I think there may be, if all the participants, I request all the participants, please off your videos. Please switch off your video. Please turn off your video. I request all the participants, please turn off your video, because it may improve the. I request all the participants, please turn off your video. All the participants, except Suresh sir, all the participants, please turn off your videos. Mr. Padmalusan Raut sir, please turn off your video. Padmalusan Raut sir, please turn off your video.
And Partho Sarathi Das.
Partho Sarathi Das sir.
I think he is not there in the room. Inside the room. Even Suresh sir also, you can turn off your video mode if it is creating problem of voice.
No, it's fine.
Sanas, please turn off your video.
Should I turn off?
Turn off your video.
Okay. Hello.
Can
you hear me?
Yeah.
It's clear?
It's clear now.
Okay. As I told that the insurance penetration has increased. It's from 2.71% to 3.6% in the financial year 2017. Now the point is that if you see that India is one of the overpopulated country in the world, but insurance penetration is at the lowest in the world, it shows that there's a larger scope for the insurance sector's growth in this country. Because still, if you see the data, around 18% of the populations are covered under this insurance policy. Now the point is that how does this insurance sectors will help for the growth of your country? Because if you see the majority of the investment is taken by this insurance sectors, are around 80% of the investment is going to the government infrastructure investment. As a result of this one, the employment opportunity is created as it is contributing to the economy. So given this fact, during this pandemic COVID-19 situation, how does this pandemic has created
Madam
problems for the
Bornali,
insurance
please
sector?
turn off your video.
How does this has created
Bornali Dekka, please turn off your video.
drag the
Dilip Kumar
insurance sector
Bora,
down?
please
So given this,
turn off your video.
so here in this presentation, I'm going to discuss on three aspects. One is that how does the impact of
Dilip da apni video.
impact of COVID-19 on the health insurance industries and non-life insurance industries and life insurance industry. And given these three factors, I'm going to issue that what are the challenges they are going to face, what are the opportunities this insurance industry is going to face in coming days, given this pandemic situation. Basically, first I'm going to talk about impact on the
Parthasaroti Das, please turn off your video. Turn off your video. Parthasaroti Das, sir, please turn off your video. Because of network issue, I request all the participants to please turn off your videos.
Insurance
Parthasaroti sir, please turn off your video.
Insurance schemes covering with a private health insurance covering only 18% of the population in urban areas and the 14% of the rural areas. Given this fact that the health insurance is covered only 18% of the urban population and the 14% of the rural population, how does this pandemic impact on the health insurance industry? So one and liquidity. Because this pandemic situation, the IDA, the Insurance Regulatory of India, has suggested the insurance companies to add on this COVID issue. If anybody has a claim with respect to COVID-19, try to refund their funds. So given this one, there's a significant increase in the claims, which is going to have the additional burden on the insurance. And this is where the health insurance industry is going to have a suffering in the coming days. But given this fact that as the cases are increasing from the day to day, if the claims are going to increase more and if the announced catastrophic situation in the country, then it is the biggest burden on the health insurance balance sheet, where it is going to affect. Given this fact that if the claims is going to increase in coming days and the claim cases will be going to more and it will be burden on the books of the health insurance. Apart from that, the one more thing which is really interesting fact is that given this COVID-19 issue, now the point is that non-emergency cases operations are postponed. Because of that one, the claims from the non-emergency things are coming. What happens after this in the long term, this non-emergency issues can arise. As a result of that one, the claims can increase. But given this point of time, the health insurance industry has much good balance sheet with respect to insurance. Now, as they have around 50,000 crores of is with insurance, but is not if the 90%, then it is going to be a problem. Given that problem, the burden is not as terminal transmission happens, then the cases increase to much more, around 15 lakhs, 20 lakhs, 30 lakhs, 30 lakhs. then the real burden starts for the health insurance industry. So given them in the short run, the health insurance industry is not in a much problematic situation because given of their capital adequacy which they have with them. So as a result, now they are not in a problem situation. But if the cases are increasing over a period of time, the claims are increasing over a period of time where it is announced catastrophic, then the health insurance balance sheet will now the point at what are the major challenges which they are going to face in this one. So one is that the impact on the health insurance companies is basically depends upon companies' risk mitigation plan, how they are have risk management mitigation, and how long this pandemic can prolong, and whether they have adequate reserves to come. They have a proper strategy with them. If this kind of a total risk mitigation plans are there, in the long run, the health insurance industries can overcome the problem. But if inappropriate risk mitigation plans are there, such kind of industries, such kind of health insurance in the companies are going to suffer at larger level. So again, what are the basic challenges which the health insurance industry is going to suffer is that there's a greater concern about like health insurance increase 30%, means after this pandemic, the people are becoming health insurance. So there's a record by the KPMG. They said that around 30 to 40% of health insurance policy and inquiry has increased, which means that it is creating business for them. Now the several insurance companies they have come with innovations during the pandemic, during the COVID-19, Corona Rakshak, Corona Kavach. These are the insurance policy which are meant basically to short-term period. The period starts from 5.5 months period of security. During this time, if you get corona or if you get around 2.5 of it, they will provide you. That is what the benefit of corona. The many health insurance companies are coming with a new product to take advantage of a situation to make a proper business in this situation. As a result, many other companies are following this kind of a new policies. The challenges which the health insurance companies are going to face, but there is also a problem because of the financial impact, reduced cost productivity, all of which are the concern for the insurance industry. As I told you that now because of the social distancing, the many of the employees in the insurance industry, many other industries, people are not going to offices, they are working from the home. They are more on technological dependencies. So as a result of there is again because of technological dependency, there may be other kind of risks arising out of that one. So given this one, the health insurance industry in the short run, they are in a bad position. But if this COVID-19 cases increase rapidly, drastically, then the health insurance industry's balance sheet can collapse. Then they can be in a catastrophic situation where they cannot overcome that one. So to overcome that one, they should assess their proper risk mitigation plan, the proper reinsurance plans. By this, they can protect themselves from this kind of a COVID-19 or catastrophic event. So this is where the health insurance industries we are talking. If we talk about general insurance, the general insurance are the industries which do not come under the ambit of life insurance. Such industries are called as a like we have a fire, motor, and accident. Other miscellaneous are also there in this industry, and this industry is major industry. General industry, insurance industry is a major industry in the terms of economic development, because the large proportion of this sector is dependent on industries and business such as automobiles, the travel hotels, infrastructure, the construction, and the manufacturing. In this, there is a lot of challenges in these sectors where these industries are contributing much to the development of economy and the growth of your economy. So in this, one of the sectors, a major sector is the motor insurance. So again, we have seen that the entire automobile industries was already facing a dip in 1920 because of the change in the policies. Like now the BS6, every automobile industry, they should adopt a BS6 engine to reduce the pollutions in the system. So as a result, many of the customers were postponing their purchasing of their vehicles. So as a result of that one, we saw that there was a dip in the sales of the motorcycle. So this industry, the automobile purchase, it constituted a major portion of the premium, and hence, as a result of the drop down in the sales of automobile industries, has brought down the premium collection in the general insurance. So as a result, the business has taken a stagnant position in this industry, and this is where the one of the biggest problem has arrived in this automotive insurance. Again, the one more thing is that as we are following the social, many of our people are not going to the roads, and because the lockdown situation is that people are not going on the road. As a result, the claims have come for this industry. Again, as a result of this is what in the short term the claims have come down. But other side, the sales have not increased. As a result, the premium has come down. But still, our industries are not in such a bad position. But the point when claims should come and check that if the amount is more than the 50,000, the claim surveyor should come to the position and check the survey. Because of that, there is a delay in the claim because he cannot come because of social distancing, other things they cannot come. So as a result, this is what in the short term is that there is no much. As a result, there is the burden on the motor insurance is not much there. But in the long run, going to impact not in the public transport. And there is more private the time can go up, but as a result, again, the point is that as a result, as the premium goes up, as the more vehicles on the road, if the more again claims will increase. But there is yeah, the simple that is that the into the own place, people living the job where the urban orient, the people are going to place laborers away in the urban cities, and as a result of that, being in a difficult position, they cannot manufacture the product as they used to manufacture earlier. So what happened is that due to this one, all the logistic difficulties can arise. Again, the spare parts industry is suffering now. As a result of this one, the motor insurance is going to suffer a lot in the long term because of the social distancing, because of this COVID-19 pandemic which is created among the society. This is where we, in the short run, the company is not in a bad position, but if this continues for the over a period of time, if the cases are going to increase, the manufacturing sector is going to suffer, the insurance industry is going to suffer. And this is where motor insurance is going to suffer. And one more thing which I want, given this both health insurance and motor insurance, because I told you that health insurance is a major player in the terms of health insurance, and the insurance is a major player in terms of insurance. Now we about the COVID-19 impact industry. The life is the policy we endogenous plan. Different plans are there. Loss insurance, have come down. What can yes, because of COVID-19, the term insurance, the demands for the term insurance increased very. The people are asking term insurance plan. Now the people are regarding term insurance increased because there is a fear that if anything happens, my family is in the trouble. So to protect their family, the people are opting for the term. But of so much because there is a demand for the term insurance, but the premiums are because there's a other lack just the insurance has come down. Given this one side inquiry is very high, other side ability to purchase is very less. This is there is very difficult situation in the economy where your earning levels are coming down from day to day. Again, there is the attrition rates are increasing where the people are leaving jobs, they are going back to their villages, and the companies are not ready to recruit the new people. So as a result of that one, it is economically it is not viable for them to purchase this insurance. So as a result of this one, we have seen that there is a largely it has demand is there, but ability to purchase that policies are not there in the system. So as a result, this is where in the term life insurance industry, the sales of few types of life insurance may increase, but in the long run, it may not possible given the fact that there is some assured and the premiums are increased. So now the point is that what are major issues happening in the recent times is that as we all know, people are from the way of working has taking place now. Why? Because earlier they used to come to their office, they had all the security systems in the system, but now the people are working from the home. Because of that, the people security of their database have issue or a problem. As a result of that one, the cyber security in this pandemic situation has been a biggest debate in the insurance industry, how to protect our database. So extra money, extra assets are laid down on the cyber securities because of the additional burden is created on the insurance industry. So given this fact, how does this, what immediate impact could organization face as a result of COVID-19? What immediate the business impact could organization face as a result of COVID-19? One is that the maintaining business operation will be most important factor for them because of this culture of crisis, this COVID pandemic situation. People are working from the back home. As a result of the maintaining business operation is the most important problem for the insurance industry. Again, absence of workforce and decline in efficiency. As we know that if the people are back home working, we cannot assess that how efficiently they are working. If they are even efficient, there is always a doubt in the mind of your boss that there is an absence of workforce. People are not there under your roof. So as a result, there is inefficiency. And stress and the panic is created among the employees, because as we know that as there is no much new policies are coming, no much new businesses are not coming. There's the layoff employment, the layoff your employees because of this job losing fear is there, psychological stress is there. You want to pay your EMIs. If the job is not there, there's a lot of panic situation is created. So these are the few things. Again, there's a rapid shift to remote working and need for the technology. As I know, the simple example is that I'm staying in Hyderabad only, but there is a technological issues. If the person is sitting in his village, how much the technological issues he can go to face it. So these are the things that, again, one more important is that the greater dependency on the online digital platform for sales, renewal, and servicing of the policies. And this is a very important thing because as we know that the insurance, one of the factors for insurance industry growth is agents. Now because of this pandemic situation, the agents are not able to reach to the customers. The social distancing is there, they are not able to reach to the customer because there's lots of problems there. The employment is not there. The income generation is not there among the people. The middle class and lower class, business class, they all are suffering because there is a lack of business in the system. So as a result of that, what happens is that the sales has come down, the new sales has come down with this respect. Under the current situation, what are the major they should think of is that they should see that how can you secure the remotely working practices, because if you are working somewhere in the village, or if you're working somewhere in your home, how to secure that line, how to secure that my platform where my data is not leaked. Again, I want to see that the security functions works properly. So as a result of this one, there's a larger threat of your job is arising in the market. That's why the cyber security is being a very important role in during this pandemic time, to see that we cannot lose our data, where we cannot where because of the loss of your data, you can lose your businesses. So this is where the few things which where the current situation is arising, where the organization should take care of the issues. And again, what are the major challenges for the Indian insurance industry? One is that, as we know, that product development. A simple example I gave is that some of the companies who are dynamic in the market, for example, they bought the insurance policy such as Corona Rakshak. When this Corona Rakshak, the simple example I also taken Corona Rakshak. Initially, we approached Mandalam, one of the brand players in the market. So when we took policy, it was say 9 point of 2 lakhs of the Corona. The VPA was the policy their around for 1. See, this is where the writing problem as arise, because they were not able to assess what is be my premium, what is my premium to be given to the what you know where market is going to develop new products. So where this is the time where the product role, creating awareness about this new product can create a larger business platform for this industry. Again, the creating awareness about these policies, and one more, the most important is that to protect themselves from the cyber attacks. Recently, we have read in the newspapers, we have read in the many newses that the cyber attack is happening frequently for the government offices, other things. So if this is the case, how do you protect your database? So this is the biggest challenge for the Indian insurance industry. Again, what are the opportunity? I told you that. So I told you simple thing. Yes, there is a pandemic, there is a COVID-19. So we cannot stop from all the businesses. So they are increases by product development. Again, that one, how sustain long-term mitigation. These are a few things. IT, because insurance industries are failed to grow in the competitive market because of the lack of every company depends on actuaries who try to assess them, that actuaries who underwrite the premium policy. If this underwriting goes wrong, companies suddenly when they saw that there's huge, they saw bought premium assured to the 1.5 x. The getting the motor insurance, yes, the short run they are not long term have a plan. How to keep your even this fact, if you over how this COVID-19 is going to impact the industry in the short, it has in the short run, insurance and the motor insurance is no impact. As to my I told the population has taken in our rural population. If whatever I have a pre-base of 3, if I cross the 50, insurance industry one, the cost should increase around 40%, increase health insurance. Given their problem, I wish about the toll in many states, government told operation postmodern problematic situation, but time health plan risk mitigation and will help to protect health they want to buy their two-wheelers as two-wheelers and it shows that there is motor to so because of that one, there are people are purchasing. So because of this one, we can say in long term, the sales of this motor vehicle can go up, their revenue base can increase. But at the same time, if a lot of motor vehicles comes on the roads, accident happens. If the accident happens, the claims also will increase. So this is where there's also opportunities there, there's also risk is there. So how to assess, how to manage this opportunity and the risk is in the company's hand. If they have a proper policies to overcome this one, if they have proper risk mitigation plan, then only this industry can survive. As I told, overall, there is a great opportunity and tremendous growth potential for this insurance in India, because still I told you our penetration rate is 3.69. You see the developed country penetration is around 15%, 16%, 17% penetration. There's a huge, tremendous contribution can be made in the economy. A large employment base, no, there is a level that is insurance. The tremendous growth, the same time the economy is coming down. It is coming down, coming down. A lot of migrants your income is not happening, growth is not happening, then ability to happen. Given this fact, one thing I can say, economy growth for your insurance sectors has a tremendous scope and a growth potential in the coming years. Given this one, I want to conclude with the 2 words is that, yes, this COVID-19 has created a huge fear the system, the economy, but if the insurance industry can create a opportunity, then such insurance industry, such insurance companies, further dynamic in nature, they can make their presence in the market. So with these few words, I want to thank you one and all for giving me the opportunity. Thank you. Hello.
Hello, Suresh sir. Thank you very much for your presentation. It was a good presentation, but something maybe due to network problem, sometimes it was blurred. Some questions are coming here. Have you seen, sir?
Okay,
Please define why should we keep on investing in insurance sector while the economy of the nation is repeatedly degrading day by day due to pandemic. It is question from Tapas Kumar Bharali. All the banking
Okay,
sectors,
why
insurance
should we
companies, and other investments agencies are gradually lowering their interest rates. In this scenario, how can a person take the risk of investing? Will the health sector provide the same benefit that they promised before, in spite of the probability of maximum cases due to this pandemic? 3 questions.
So there are multiple questions here. Questions. Please define why should we keep on investing in the insurance sector while the economy of the nation is rapidly degrading day by day due to pandemic. See, I want to ask to, in what context, means investing in the insurance sectors, I couldn't understand. It's from the insurance sectors or they are from the economy side? That I'll answer later, that one. All the banking sector, insurance companies, other investment agencies are gradually lowering the interest rate. This, how can the person take risk of investing? This is a very interesting fact, is that as we know that repo rates are coming down, other rates are coming down in the system. As a result of that one, here basically one person should understand that if you are investing in an insurance, it is you are insuring to yourself for the uncertainty. You are insuring yourself to uncertain things where you are uncertain of your future because of this pandemic. There's a lot of fear among the people, is that because as the death rates are increasing in the economy, you can see that there's a fear. Even I have a fear. Because of that one, I took Corona Kavach, Corona Raksha, because if something happens, I want to protect myself and my family. So given this one, we cannot compare because now everything we cannot compare on one thing that we should invest or we should not invest. Now the point is that insurance industries as such, they're investing a lot now on the certain products because they see there is a huge scope for their product in the market. Once they see huge scope for their product, obviously they have a larger profit in the long term. Again, if you see that interest rates are coming down, now the point is that the insurance companies, for example, I told you initially that insurance industries are investing on the government bonds, other things. As the government bonds are coming down, their profitability of the insurance industry is also coming down. That doesn't mean that they should stop over there. They are trying to minimize their investment. They want to search for other source of investment where they can make more profit. They want to make assets. And the third one is that will the health sector whatever they have promised, they should provide it can bring maximum cases and they're just you should clearly give your details properly. For example, sometimes you are a smoker. For example, you are a smoker, but you don't want to tell to the health insurance that I am a smoker. So as what cancer or some insurance industry doesn't pay. You pay your claims. Okay, next question.
Next question is not here. So question answer session of this topic is going on. If there is no question, we can move to the other topic, to the other resource person. Okay, Suresh sir, I will put it down or write it down if any questions comes, and I'll send to you.
Okay, fine.
Okay, thank you very much for your valuable speech. Obviously, the Brojan Neok sir will give the vote of thanks formally later. Let me come to the next resource person, Dr. Rajiv Sutradhar sir. Sutradhar sir, are you there?
I am there. Am I audible?
Yeah, clear. It's clear.
Yeah. Okay, good.
Before starting your topic, let me introduce a brief introduction to Rajiv Sutradhar sir to the participants. Dr. Rajiv Sutradhar is presently working as assistant professor at the Department of Economics, Christ University, Bangalore, where he teaches ethics and economics. at postgraduate level and managerial economics and development economics at undergraduate level. He completed master and PhD in economics at Jawaharlal Nehru University, New Delhi. He also a visiting professor of research scholar at the Department of Agriculture and Applied Economics, University of Manchester, USA. Post PhD, Dr. Sutradhar worked as assistant professor at Institute of Economic Growth, New Delhi, then OKD Institute of Social Science and Development, Guwahati. Before submitting his PhD thesis, he was also associated with National Council of Applied Economic Research, International Food Policy Research Institute, New Delhi office, and Institute of Human Development, New Delhi. Dr. Sutradhar's research interest lies in agri-food value chain, rural economy, labor migration, and impact evaluation. Recently, he completed as principal investigator a research of a major research project titled Welfare Implication of Collective Action in Global Value Chain, a case study of organic ginger in Karbi Anglong, Assam, sponsored by Indian Council of Social Science Research. He has published in reputed international and national journals, which include World Development, Agricultural Economics, Food Policy, Economic and Political Weekly, International Journal of Rural Management, Indian Journal of Agricultural Economics, and Indian Journal of Human Development. His most recent co-authored article titled Supermarket Procurement and Farm Gate Prices in India will be available in the upcoming issue of World Development. Sutradhar sir, the mic is yours now. Over to you.
Okay.
Today, just 1 second. Today he will be talking about agriculture in Assam in times of COVID-19. Okay, over to you, Sutradhar sir.
Yeah, sure. So, can you see my slides?
Yeah, it's coming.
Yeah. Okay. Good.
Yeah.
Yeah. So let me just start with the slides. So for the current, yeah. So first of all, let me extend my sincere thanks to Dr. Bipul Chandra Bhuya, Principal HPB College, and Devajit Soika sir, Principal Majuli College. And also, I like to extend my sincere thanks to coordinator Brajan Neok, Bipul Rava, and Polas Hendik. Okay, and yeah, and it's a very warm afternoon to all of you, all the participants. So first, so the topic that I'm going to speak about is Assam agriculture under COVID-19. Okay, yeah. So let me first, if you ask some people, many environmental enthusiasts will say, what's the positive impact of this COVID-19? They will say, okay, this is like we have now clean air, clean environment. Now we get to see a lot of species, birds and animals, which we don't usually see because of less economic activity. But I would like to say there's one other positive effect of this COVID-19. It's basically we are now like forced to pause for a moment and think about the kind of development model that we are following. Is it really working well? I mean, because if you see the images of migrant workers walking thousands of miles from the place they work to the villages to work in agriculture or probably their home, we don't know exactly, but then they are all going back in a huge number, and that's cited as I think the biggest humanitarian crisis after this partition that happened in 1947. So this COVID-19 actually has forced us to pause, and question the kind of development model that we are following. Okay, I would like by stating this, I would like to say that whatever is going wrong now, putting all the blame on this COVID-19 alone is like missing the big picture. Of course, COVID-19 is a very serious crisis, but then there is something going wrong long back. Because of which this crisis has actually there is some existing thought line that's already there, but then we prefer to ignore, or probably we didn't see or we didn't feel it. Okay, but this COVID-19 has actually exposed this those thought line that existed there in the economy long back. since long back. Okay, so let us see what is the unique crisis that we see in the COVID-19. Of course, I mean, if you remember, before COVID-19, around 2018, 17, there's a slow demand that you get to see. I mean, just like now we are organizing a lot of webinars on COVID-19. I mean, I remember before this COVID-19 strike, a lot of universities are organizing conference on demand slowdown. So there's an economic slowdown to begin with. I mean, before this COVID-19 struck, and when COVID-19 struck, all of a sudden there's a lockdown happening, and because of which we have now sudden stop of production activity. So earlier there's a demand slowdown to begin with, then production shock, and then it leads to a lot of stoppage of economic activity, layoff, and then further loss of income, and then people started losing more and more in income. I mean, and then it leads to again so that's basically demand slowdown, then production shock, and then again demand shock, because now once you are laid off from the production process, you are not going to demand anymore. So this is a vicious circle that you are going to end up with because of this COVID-19. Okay, and now if you see how bad is the crisis, I mean, if you look at now RBI's prediction, that is negative growth rate in the month of May, and similar other international agency like Moody's, they said the zero growth rate for India, and IMF, International Monetary Fund, they said it's a minus 4.5. That means Indian economy is going to contract by 5% for the next year. And it's not that just India is doing bad. I mean, if you look at the world level, that's 4.9, almost 5% contraction. But then if you look at someone like a chief economist, ex-chief economist, Pranav Sen, he said that Indian economy is going to contract by 10%, 10 to 11%, right? So this is so bad that now it is drawing comparison with the World War I, World War II, then Great Depression, at which time the world economy was contracted by around 8% to 10%. Okay. So now, but then if you look at now the dailies, now newspaper dailies, the only bright spot that people say is agriculture. Okay, I mean, Principal Sir has already said that agriculture also is going to suffer because of there's disruption in the supply chain, not enough people working. But then there's a tiny bit of good news in this entire economic structure. That is, agriculture is now expected to grow by 2.9 to 3%. Which is as much as last year, and in the next year also we're going to have the similar growth rate. Okay, so and we are going to have a record physical output, which is 290 million tons. Okay, and this is partly because, I mean, unlike manufacturing, this agricultural activity is all spread out, right? There is not one particular urban areas that these entire things are happening, right? It's all spread out, and its physical distance is more easier to maintain. Okay, and a lot of people are going back in the villages, right? And they offer some helping hand. It might be multiple factors, but then agricultural production is increasing, and it's going to reach 290 million tons. Okay, but in terms of, I mean, how much of that translate into income, we don't know, because like a lot of people have lost job, because of which their demand is going to be less. So price will fall. So total finally income that farmers get is P into Q, quantity plus prices, but price we don't know. Okay, so that means price may fall. So but now I want to take I just don't want to stop there at this moment. Okay, because then if we just only focusing on post-COVID world, then we may actually lose a lot of the long picture, large picture. Okay, I mean, because the migrant crisis that we see, it's also because of something that is going wrong in agriculture, in the rural sectors. I mean, otherwise, who wants to leave their villages, their families back home, and walk thousands of miles to work in the metro cities where they don't speak the language that the people speak there, right? I mean, they feel isolated, discriminated, right? So why are people leaving agriculture and migrating to the towns, cities? Okay, so let us now look at this larger picture in agriculture, right? And while speaking that, I'll be speaking at the national level, and then I'll certainly after that I'll come back to the Assam. Okay, if you look at agriculture is still the backbone of our economy. I mean, its contribution to GDP has come down significantly, like 15% of the GDP is coming from agriculture. But even now, agriculture employs 45% directly, and then 70% of the people are directly or indirectly linked with the agriculture. Okay, and if you look at this back of the envelope calculation, that means 45% people depends on 15% of the income that is generated, and remaining 55% people are dependent on 85% of the GDP income, right? So obviously, like, much more people are dependent on a very less income that is coming from agriculture. So it's obvious that people who are dependent on agriculture, their income is much less. Okay, So that means people's standard of living in agriculture is much less compared to what you get to see in the manufacturing and service sector. Okay, so then it leads to actually, and why is this happening? Why is this happening? If you look at investment in agriculture has also declined over a period of time. Okay, public investment, right? And obviously, agriculture is also very risky activities. Okay, when government withdraws its investment, so that means risk is more now. If you are a farmer and if government is not investing, say, irrigation and all, so then as a farmer you face more risk. So you also think twice before you invest things, right? So private investment has also stagnated over a period of time. Okay, and it's very risky. Government is not withdrawing its investment. So as a result, and if you look at the figure, the last 5 years, public investment as a percentage of GDP is less than 1%. To be precise, 0.44%. That means not even 1% from the government side for a sector which engages 44% of the population, right? So you can see the present neglect of this sector from the government side. Okay. And also, if you look at the other big pictures, and it's not just the production side. Even if you produce, you are not sure how much you will get. I mean, if you look at over a period of last 50 years, MSP, minimum support price that farmers get. I mean, not many farmers get MSP price. They get less than that. MSP, that minimum support price that farmers get, that increased by only 19 times from 1970 to now. Over a period of this 50 years, MSP increased only by 19 times. But if you look at the salaries of school teacher, primary school teacher, during the same time, it's increased by 300 times, 280 to 300 times. Professors, it increased by 180 times. Okay, so that means one is the production. Even if you produce, you're not getting, you're not sure of how much you will get. And recent study, OECD and IQAC, Indian Council for Research in International Economic Relations, they say that from 2000 to 2016, the 16 years, farmers farmers in the country lost 45 lakh crore. 45 lakh crore money. That how is it estimated? Basically, they included how much cost they incurred, like all the fertilizer, pesticides, seeds, everything, and how much they should have got minimum, but then how much they got actually. Okay, and so that gave a figure of 45 lakh crore. Okay, so in that situation, when you're not sure, even if you produce, you're not getting enough prices, you're going to suffer loss. So even giving credit doesn't help. I mean, a lot of people talk about government's credit to the sectors has declined. I mean, government is not giving enough credit. But then if you are giving credit, that's not going to help. I mean, because see, if you are a salaried person, and even if now some SBI come to your home and say, no, I'm going to give you another credit, you have to think twice. But then here, farmers are clueless. I mean, they are, even if you give credit, because their earning is so less, but they will be giving any credit they get. And even if and when they get credit and they produce something, they're not getting good prices. Then that is pushing them into further even higher level of indebtedness. So this is a crisis that this whole agriculture sector is facing. And recent 2016 economic survey estimates actually farmers' income. So it says that actually farmers' annual income is rupees 20,000 annual income. I'm not talking about monthly income, which comes up to 1,600 rupees monthly, which is less than mobile bills or food bills of many of you. I mean, many of you have spent even one sitting more than 1,600 rupees, right? So basically, there is something wrong. I mean, MSP, probably we need to raise this MSP. I mean, I still remember there's MS Swaminathan, who is known as a father of Indian Green Revolution. He in fact once recommended that MSP should be raised to cost plus 100%. But then all hell broke loose. I mean, people were shouting, no. I mean, even now we bargain. Even if they say potatoes for rupees 20 rupees, we bargain like anything, right? So all hell break loose when MS Swaminathan said that this price should be cost plus 100%, and then additional, so that farmers get income, right? So, and now if you look at this Assam, this is the whole picture at the national level, okay? But if you look at the Assam scenario at Assam is even more agrarian than the national level, because here 20% of this state GDP come from agriculture, and as opposed to 45% of the population who are dependent on agriculture, in Assam, as much as 75% of the population are dependent on agriculture. Okay, and just I want to draw a contrast for the national level at the state level. If you see, in Assam, rice accounts for 90% of the total land use. So rice is the main crop. And if you look at this total yield here, Assam's rice yield is 1,600 kg per hectare, and this compares with 2,200 kg per hectare at the national level, and in Punjab it is even more, 3,000 kg. So that means they produce more per acre of land or per bigha of land compared to Assam. And also because of flood, we have just only one season, and only few farmers grow more than one season, right? So this is captured something called cropping intensity. So our cropping intensity is 146 compared to Punjab, which has 190. So that means farmers in richer states like Punjab, Haryana, they not only have more production per bigha or per acre of land, but then they use the land more intensively. That means their cost per kg of rice is less. Okay, so because they have a larger plot of land, they produce more from the same plot of land, and then they use that land more intensively, right? So as a result, what we have is like, and also what happened is that Punjab and all these are basically historically, like British has built some canals and all, and these farmers are more capitalist farmer. They have a very large farm size, and so they managed to basically, what you can say, influence the government policy in support of subsidies, right? Because if they get subsidies, then farmers who produce more, they can get more out of that resources. But if government spend on public investment in agriculture, they won't get much. So there's a whole political economy. So there is a really big farmers lobby in Punjab and Haryana who influence this pricing process. But then now if you look at Assam, Assam has not only very small farm size, okay, every farmer has some 6 bighas, 7 bighas of land, when public investment is so less, right? And subsidy, there is no subsidies. Because if you produce less, then you can hardly take the benefit of subsidies in fertilizer, pesticide, okay? So basically, in every aspect, our farmers are more disadvantaged, okay? And also, there is no MSP procurement. You hardly see government or FCA procuring the rices that farmer produce from our state. Now, if you remember, now recently, if you read the Assam newspaper, Assamese newspaper now, there is now this there's a big controversy around pig. Pig means gahuri, right? So now this Punjab and Haryana farmers are going to export pigs to Assam, right? Because the Assam pigs are now industries are facing existential threat because of this swine flu or whatever, okay? But then also there's a big politics behind that. Because there's all this Punjab and Haryana people hardly consume pigs, right? But then they produce this, they have a more organized supply chain, right? And they can easily transport these to Northeast or any part of the world, okay? So as a result now, we do not have a robust agriculture to begin with. People used to depend a lot on this pig and all this poultry. Poultry is already gone. But now we will see in our next coming years, this poultry industry being wiped away by this huge amount of pigs that is going to come from Punjab and Haryana, okay? And what is happening now in the pigs has been happening in the case of rice for a long time, but people didn't take note of this, okay? I still remember there's a year around 2008. 2008 is a year when Assamese farmer produced a lot of this rice yield. Then their yield increased by 2-3 times because of something called SRI technology, systemic rice intensification. That's called SRI technology. And SRI technology basically allowed them to produce, it's a more intensive cultivation process. But then what happens is that there is no takers for the rice that they produce because we do not have the procurement, FCA procurement, and all the rice that is produced in Punjab and Haryana that's coming through the FCA procurement. And most consumers are getting those at the 2 rupees, 5 rupees, 10 rupees. So why will they buy from the local farmers? So because of this excessive production, they actually suffered a huge amount of loss. Okay, their total revenue is actually less than what they used to get. So that means our farmers are caught in two lands. Even if they don't produce, then income is less. Even if they produce, they cannot sell anywhere. Okay, and this is happening for quite some time. Okay, also what happened is now you can see there's even at the national level also. Now public investment in agriculture is coming down. In fact, the post-liberalism from 1990 onwards, government has withdrawn from the intervention in the most sectors, right? Government is not investing in rural sector, government is not investing in agriculture sectors, right? So then now it's allowing for the private sector to interfere, okay? And obviously private sector will go to those areas where there's a more demand, there's a more bigger market is there, and cost of business is less, where there's already a bigger infrastructure. So in a sense, this whole liberalization process is like a fast-moving train, and train will stop at those stoppages where there is some minimum infrastructure. Okay. So as a result, what we see is now cities driving the growth process. 65% of the GDP come from the cities. 65%. Okay, come from the cities, and these cities are not in Northeast. If you look at these Assam towns and cities, it's basically mostly administrative town. There's hardly any manufacturing activity happening there. It's all the towns that was set up as a district capital during the colonial times, and this is all there. There's hardly anything there. I mean, okay. So what as a result, what we see happening is that now there's increasing inequality over a period of time, because private sector is now, in fact, whatever minimum saving we do, like if we keep the money in the banks, and then where is it invested? Getting invested, that money is going to all the other places in the country, like Delhi, Mumbai, and all, because there is not enough. There's a risk. Private sector is not investing in, not taking loan from the banks and investing in Northeast. Okay, and it's very inherent process of the way market works. Okay, so as a result, what we see is an increasing inequality across states, with southern states are now charging ahead. Okay, or Punjab, or Delhi, right, or Gujarat for that matter. And the northeastern states and Assam, they are all lagging behind. Okay, and if there is something that could have supported them is the agriculture, but then agriculture also is suffering, because we can see there is no FCA procurement, no public investment happening. So as a result, if you look at this picture, see there is this, we have a two period. The blue one is basically 1993-1994 growth period, per capita income, and if you see there is not much difference across state. But if you look at now 2012 picture, if you see that big green lines, I mean, Assam is just at the low end, just ahead of Bihar and UP, okay? And all the other states, even the MP, Orissa, they are all charging ahead, and their per capita income is much more than what you see in the context of Assam, okay? So Assam is a very laggard and very stagnant state. I mean, if you see the per capita income of Assam, it's slightly above the per capita income of sub-Saharan country, the poorest region in the world, okay? So this is how this whole world is shaping up. I mean, the whole Indian economy is shaping up. Okay, and if you look at now, this is what this per capita income grows. See the bottom line is the Assam. The per capita income is growing, but it's very stagnant, and it's lying behind all the major states, be it Haryana, Kerala, Maharashtra, Gujarat. It's just slowly. It's like a snail's pace. I mean, it's picking up slowly, but nowhere compared to the other states. So as a result, if you look at this picture also, ratio, Assam's per capita income, if you compare 1993 with now 2012, per capita income increased by only 1.55 times. But if you look at Haryana, it increased by 2.63 times. Gujarat, it increased by more than 3 times, 3.27 times. So now again, if there's other way to look at it, if you take a ratio of per capita income of Haryana to Assam, in 1993-1994, it was 1.62 times. But now if you see Haryana to Assam, it's a 2.76 times. So it's almost 3 times more than that, okay? So as a result, what we see is that people moving from village to cities, people moving from low areas, I mean, low income earning areas to the high income earning areas. So, yeah, and if you look at this development economics literature, right? I mean, people who move from the rural to urban, it's a very, very good development. I mean, because over a period of time, everything will become, because more people are now living in the urban area. And that's a good sign. That is what Arthur Lewis has said. I mean, because finally most people who live in the urban areas, we have a more developed modern state, okay? But then what we see is that, I mean, a lot of people are urban sector not getting job. Then there's another model called Todaro model that says, no, I mean, they are coming because they know that if there's a life that is in the urban sector, they will wait and they will get a good job. I mean, so this is called waiting room in the train station, waiting room. And this whole, that means people will finally over a time, whole country become a developed, just like US or America or UK, like everything will become urban, and there will be only very few people living in the rural sectors. But this is not happening in Indian context. People are moving from the agriculture because there is nothing much in agriculture. They're going to the urban areas, but they are not getting enough income. Okay, it's like, and the kind of job that they get is extremely informal. There is no job security. So that means this whole informality is not a waiting room, just like Todaro has said. It's basically a final stoppage. I mean, it's a blockage room. I mean, they have nowhere to go. I mean, so this is, as a result, what we see is now a kind of a workforce where, like, we have a workforce of 471 million. Okay, out of which 93% of the workforce is in the informal sector. There is no job security, and out of this, 1/3 of them are migrant. Okay, they are moving from the cities to the urban areas, but then they are not sitting in the urban areas. They are again moving back. That's why they are migrant. They are not permanently settled. Okay, and out of that, some of them are seasonal migrant, because cost of living in the cities is so high, they cannot afford to settle down. What they do, they work in the agriculture for 7 months, 6 months, and then go to cities, do some construction works, and then they come back. And cities also like them because I mean they don't have to give any permanent kind of accommodation. Okay, they are just also they because of this lack of option in the village, they are ready to work at such a low wages. Cities, the industries, they like them. Okay, so as a result, what we have seen, and this process is also becoming extremely prominent in. So that means out of this 140 million, which is 1/3 of the workforce, they are migrant, and out of them, more than 40% of them are very seasonal migrant or circular migrant. They move from Bangalore to Kerala to Ahmedabad. They keep moving. There is no perfect, no permanent destination. And sometimes they go back to their home to work in the farm. Okay, and these people are not covered in the census because they keep moving here and there, and their votes don't count. They don't vote in any place, either at the destination or at the source place. So nobody cares about them. And what now we see in the post-COVID world, a big reverse migration happening. I mean, only then we realize, oh my God, how come these numbers are going? I mean, how come we have so many of these migrants that we can't realize, right? So there is something going wrong for a long time. Okay. So, and if you look at this Assam also, it's equally bad. I mean, if you look at the Kerala, I mean, we don't know. I mean, if you ask government of Assam, how many people are living from Assam to other places in Northeast, they absolutely have no idea. Probably because over last 5 decades, we are always obsessed about all these Bangladeshis who is coming into our state, but we are scarcely aware of how many people are going from our place to the other places in India. Probably we see this as a positive sign. See, our Assamese are working everywhere, but we forget to look at what conditions they are working, where they are working. Okay, and if you look at this, Kerala has one migration report, Kerala migration report, that is some 34 lakh migrants are there in the Kerala, out of which 19% of them are Assamese. That means we have almost 7 lakh migrants from Assam living in Kerala. That is only in Kerala. But you see, and if you other southern states, Tamil Nadu and all, there will be many more numbers, but then we do not have any data on that. Okay. But then if I look at the census figure, in last 10 years, 2001 to 2011, in this 10 years itself, we have some 9 lakh people migrating from Assam to the other places in India. Okay. And this is more than, like, say, MP and Rajasthan. These are all also big states which sends a lot of migrants. So in Assam, it's like it's on the most prominent state when it comes to migration. Okay, and many of them are now going to other states, not within state. If you look at 2004, there is this data, Institute of Human Development Study, Indian Human Development Survey. They did a survey in 2004-05. It says whoever is migrating in Assam, they used to go to, like, 78% used to stay within Assam. That is in 2004-05. Okay, but they used to stay in the urban areas, and outside only 21% used to go. I mean, but now that has changed a lot. In 2011-12, we have 44% people living within Assam, whoever is migrating, and 55% living all the way, and it's out of Assam to other states. Okay, and when I am saying migrant, I mean it's not me. I mean I am very privileged speaking over WebEx or Google Meet, right? I mean, but most migrants are in extremely difficult condition. And where are they coming from? They're coming from all these shore areas in Dhemaji, Lakhimpur, Dibrugarh, Morigao, Kokrajhar, all these areas. That's a big pocket of this migration. Okay, and now that this production activity has stopped, they are the first batch of people to leave, because these people are recruited through some middleman. So if they are working in the construction work in DLF is not hiring them. They don't know who is their employer. There is one middleman or contractor who will contract them, and their wages will be fixed in Assam. So if Assam wage is say 250 rupees, probably they will be paid 350 or 400 rupees. But then if they are working in Kerala or say Bangalore, where wages is 700, 800, they are not going to get 700, because this is an advantage of this acute deprivation that this Assam or many other states are having. Okay, so and how many of them are coming back? As far as Assam is concerned, I don't know. But then there's 184 Shramik special train which already came back to the state, and which give an estimate of 1.3 lakh, and 77,000 people also came by other modes of transport. And if you go by NDTV report, it says some 6 lakh migrants are stuck in different parts of India, and they're trying to come back. And now they are coming back to Assam. And if you look at, and this is the same scenario witnessed by a state like Rajasthan or state like Bihar, Jharkhand. These are all poorer states, or Orissa, who send the bulk of the migrants to the other part, southern part of India, where basically a population has become stagnated, and they're working in all these sectors, keeping the cost very low. Okay, and if you look at and what the contribution, if you look at the Bihar, state like Bihar, 1/3 of the GDP come from migration, from remittances set by the migrant. Assam, we do not have any figure, but then it won't be as high as Bihar, but then it will be still a good number. So now what we have seen that Assam is a poor state. So we have a poorer capacity to deal with the such crises. I mean, now all of a sudden, huge amount of people are coming back to our state. Okay, now we are not only losing the remittances that are sent by these migrants, and now we have to deal with them. Okay, and now what we have then is a kind of a centralization, right? Post GST now, state do not have this power to tax people. I mean, okay, and most of the taxes are going to center. Okay, and center will now then send to people, send money back to the people. Okay. And as a result, now we have a less autonomy. So this is the states who are actually fighting this COVID-19 battle, right? If you see in Assamese newspaper, Hemanta Biswa Sharma giving every day news tweets, right? So it's a state is the battling this COVID crisis. But then we do not have money. We're depending now more on the center than before. And this now there's a Govinda Rao, this former director of National Institute of Public Finance and Policy, and he gave an estimate that even if now India's GDP grow at the same rate as the last year, which is normal time, still our devolution to the state, center's devolution to the state will decline by 2.5 lakh and 5 lakh crore. And now that, I mean, we have already some 7-8% or 5% contraction of GDP. There is now Rajiv Rao, he gave an estimate, who is now the present director of NIPFP. The state's share of resource will come down by around 5 lakh crore. So center has said, and now if you look at the 2 days back newspaper, center said that we do not have now money to give whatever is promised now back to the state after post GST. As of now, we are fighting this financial constraint. Center has already declared. Okay, so now as a result, we have and these poorer states that suffer more because now all these migrant people are coming back to this state. We do not have mass agriculture going on. Okay, and also if you look at center is pumping in the state economy. I mean, I won't say that center is not doing anything. So what they are doing now that there is this disruption in the supply chain in the agriculture sector, center is interfering directly and saying that we are going to procure the food grains at the MSP price. So as a result, now we see in the last 2 or 3 months, 38 million tons of wheat being procured and 50 million paddy being procured, which amounts to 1,15,000 crore. But do you know? I mean, out of this, 87% procurement is happening in Punjab and Haryana and MP, and 63% of the rice procurement is happening in AP and Telangana. Okay, so that means poorer states, which are now more depressed, they are receiving the more migrants, they have a lesser financial capacity, they are not benefiting much from this center's intervention in the state economy. Okay, in terms of the farm sectors, the MSP procurement, because only 6% of the farmers in the country as a whole benefit from this MSP procurement, and much of that is concentrated in the Punjab, Haryana, Western UP, right? So because they are all big farmers lobby, they have this FCA procurement happening there. So in state like Assam, even if they produce more, they suffer. And now that this procurement is happening, there is nothing to offer for a state like Assam. Okay, so this is how this whole economy is shaping up. And now if there is something even more disastrous that is going to happen is now APMC reform. So now if we just remember, while declaring this package for the farming sectors, now government has amended this APMC, Agriculture Produce Marketing Committee. This is a law which basically regulates the state marketing. I mean, if you look at the history of this law, I mean, it was actually set up in 1940s, I think, yeah, and to make sure that the farmers are not forced to sell to the village landlord, money lenders, if they throw away prices, and they set up this public market. So whatever, if anyone wants to buy farm produce, they have to come to Mandi. Okay, but now because of this so-called disruption in the supply chain, government has given the argument that so now farmers are not able to come to market Mandi. So let us sell them next to the villages. Okay, so let them the supermarket and all these private sector can set up the market and let them procure from the next to farm gate, so that farmers do not suffer. I mean, but actually what is happening is that there is hardly any mandi in state like APMC, like there is in state like Assam, there's a very few mandis, and that's also one of the reasons why farmers are forced to sell at the lowest price. And now this, by amending this act, state has already, like government has withdrawn from the marketing facilities. Okay, so we do not have FCA procurement, and now whatever mandi system is there, where farmer would have probably, what we need is more mandi. Mandi not working in state like Assam is because we do not have enough mandi. But now state is already withdrawing that. And as a result, I know, and if you look at state like Bihar actually abolished this APMC law much before, I mean, in 2006. And you know what is the situation for farmers like Bihar? They have nowhere to sell. There is no FCA procurement. So if the MSP price of rice is say 1600 rupees in Punjab, farmers in Bihar is selling to middleman at 600 rupees, and then middleman is carrying it all the way to Punjab and Haryana in big truck and selling it at 1600 rupees. And I am sure even if farmers in Assam produce more, they're going to meet the same fate. Okay. So what we see is now there's already a big inequality that is existing there in terms of infrastructure, industry, and all. So in agriculture sector also there is hardly anything there. But now that state is withdrawing from the provision of the basic services like agriculture market. That's now it's withdrawing. So it is going to situation is going to become even worse going forward. Okay. So as a result, I mean, what do you need to do? I mean, what's the solution? I mean, for a state like Assam, okay. So my main synthesis is that we cannot look at agriculture alone. We cannot look at this migration, reverse migration alone as a stand alone. You need to have a whole thing in an integrated approach. Okay, this migration happens because there is nothing there in the rural livelihood. There is nothing in the agriculture. Okay, that's why they are forced to live. If someone is working in the software industry in Bangalore, there is nothing to be worried about because he's driven by a higher income, better life expectancy. But then if people are forced to leave their own homes just simply because there is absolutely nothing, then that's really pathetic situation. So, but then if we look at or stick to this development economics, whatever is written by this Mentu and all this or Todaro Smith and all this, there's no insight for us. I mean, because they said that all this urbanization is good. People are big states are becoming more and more urban. People are having better living standard, but that is not happening. I mean, what we see the urban workforce, huge degree of informality, inequality. There is no job security. They can be thrown. They don't know who is employing them. Even they fall sick or they fall from the construction houses while building, they die. There is nobody to take care of them. And we don't want that kind of migration. Migration is, of course, it's an inevitable process, but then we want this migration at a better conditions, okay? And for this to happen, we need to take care of agriculture, right? We do not want people to live just because there's absolutely nothing, okay? We need to make sure that there's a better pricing, farmers get better prices, okay? And we know we need a more decentralized model, no? If you look at this agricultural production, no, even now I am saying 290 million tons, that is more than what we as a community as a country are able to consume. We have more than what they produce. But then if you look at agrarian prices, it's depending more and more because farmers are not getting the right prices, okay? And when farmers get right prices, then they demand more, I mean, because if you look at this pre-COVID world, even there also we are struggling with this demand crisis. I mean, and we are talking about the insurance in the car sector. But if you look at just pre-COVID-19, 5 lakh people were laid off from the automobile sector alone before this COVID-19 strikes because there is no demand. There is no takers to buy those cars, okay, cars and vehicles. So that means there is a demand crisis is there since the beginning, and COVID-19 has only worsened that. And if you look at the rural sectors, now I am saying again, 65% of the India's GDP come from the cities. That means 35% of the only incomes are coming from the rural areas. But then if you look at this whole consumption price, how much of consumption happening in the national economy, out of that 57% are coming from the rural areas. And how is that explained? There is a simple concept called MPC, marginal propensity to consume. If you get 100 rupees, only 100 rupees income, probably will spend 99 rupees. But if you get 20,000 rupees, probably you will consume 15,000 rupees. So that means rural sector's ability to consume or spend the money that they get income they earn is much more. But then again, rural sector is actually crying for income generation. So probably one way to address this is give more prices, more food prices, have a more decentralized agriculture development model, right? So that even if farmers in Assam produce more, they get the fair share of income. And we need to make sure that the pig producers in Assam, the poor pig producers who are already suffering in the agriculture sector, they are not even wiped out of this pig industry, which is big, because in Assam, in Northeast, we consume a lot of pigs. And if this happens, you will see more and more migration again. Displacement migration happening from Assam to the other places in India, okay? So what we need is actually more locally driven. I mean, so, and if you remember this Gandhi, Ambedkar, they used to speak a lot about this local self-sustainable village. I mean, of course, now in 21st century, you cannot be like exact Gandhian, now we produce everything in the village. But if possible, we need to produce as much as in the village and make sure that those are consumed in the local areas. There's a local demand, I mean. And when farmers do not get enough money, and then their ability to consume something else is also very less, okay? So as a result, what we see is now I mean, there's a less non-farm sector, right? Because non-farm is also, we do not want people to be stuck in agriculture, all of them. We need a non-farm sector. But then what kind of non-farm income, non-farm sector will emerge in the rural economy also depends on the how well agriculture is doing good. If farmers are not getting income, they are, like I said, 2,000 rupees monthly income, then what demand they will produce? They won't demand anything. And then there is a scope for this non-farm sector, all this cottage industry or all this industrial product, even the low level produce MSC, MSME sector produce goods are also very less, right? So in that sense, even if we have this Act East policy and all, which integrate this Northeast with the eastern countries and our neighbors, it's not going to bring any benefit to our local economy. So what we need is a local, more vibrant economy, and we need to make sure that we not only we produce and we consume. So probably we need to relook our development model. So what I am saying is that Lewis and Kuznets, they are all given Nobel Prize for their like wonderful model, but this model do not have any meaning for us. They have to meet somewhere this Gandhi and Ambedkar. Okay, we have a more locally driven economy, consume, produce locally. Okay, and then of course we cannot produce everything. So then of course we need to have a more integrated supply chain. But then to make sure that whatever is produced locally or consumed locally, there's enough demand for that. I mean, okay, we need to make sure that there's enough FCI go downs in back home in our state. Okay, and something we need to look at it, and there's some successful model back home, but we really don't bother about that. There's one thing called Sita Zakhala. That's a cooperative sector which you will find in the Jagirod. Okay, they not only produce milk on their own, they are now going up in the value chain. They are like producing paneer, ice cream. So and which not only and which generate a lot of jobs, like right people. These are agro processing industries. It requires a lot of people, and labor intensity is very high in those sectors. So probably we need more models like that. I mean, and we need to replicate that, but there's hardly enough discussion in the public discourse regarding whether we should replicate more such model. Okay. So of course now in the immediate situation we need some public work program like NREG and all, right? And Assam government has produced, but then if you look at the job card, probably only 18,000 has registered, whereas we have some more than 2 lakh, 3 lakh people coming back as a migrant. So instead, like Dhuburi, only 600, 700 people have registered, whereas they have some 60,000 people coming back. Okay, so probably this we need to expand this NREG program. Okay, and why government is not spending? That is one big politics there. I mean, so every time if you ask like, so why not spend more? No, we need to maintain this fiscal deficit 3%. I don't know who has said that this is Lakshman Rekha that you cannot cross, right? Because I mean, and let me tell you, public budget deficit is not equivalent to the household budget deficit. If you spend more than what you earn, then you have to get credit, right? But then when government spend more, say like instead of 3%, we have a 7% budget deficit. But then say 20 participants in this room are unemployed now. But now because of this government spending enough money, they are employed. And if they are not contributing in terms of income tax, but then they are consuming enough, and so they will be contributing enough indirect taxes, which government can use to fulfill this budget deficit in the next financial year. But we are still getting stuck up with this all wrong kind of economics, like this fiscal deficit. All the TV expert will come and say, no, we need to maintain that. Even if people are going hungry, people are unemployed, still we have to stick to that, because some people, if we cross that, then some stock market will crash and some companies, financial company will leave India, right? And we are basically we are nationalists at the same time. We do not have enough freedom to carry out things that we actually need, which serve our purpose. So why not expand the NREG program? And if you remember NREG program, when this government has come, they said that I want to keep this NREG program alive because this is a sign of failure of this UPA government. Okay. But then this is the same NREG program now it's coming to rescue in this lockdown time, okay? And now we are forced to expand it. So why not expand this NREG program, create rural infrastructure, water harvesting, embankment, build some go-downs, FCI go-downs, right? So that our farmers get the due share of income, right? So basically the whole crux of the thing is spend NREG, give more prices to the farmers, right? For whatever they produce, so that because we are struggling with the demand crisis, let us not put everything into COVID-19. Before this COVID-19, we are stuck up with this 6.2% unemployed. That's the highest in 4 decades. And let me tell you, this unemployment is not comparable to something like US or other countries, because in our definition of unemployment is so low, so liberal. Even if you work for 1 day in a week, still you are employed. And then even then we have 6-7% unemployed happening in our economy, right? So why not, like, so, and this is because of the demand crisis. So why not spend more money, give more money in the rural sector where much of the demand is coming, okay? So then I think this whole, you need to look at this public work program, build rural infrastructures, make sure that farmers get the prices, and also we need to look at the reason. If we look at this whole macro thing, I mean, this whole concept, this one nation, one market is disastrous. I'm telling you, and people from Assam, we need to look at the same time. So while being nationalist is fine, but at the same time, we also need to be regionalist, right? I mean, because for a sustainable development, we need to be more regionalist. Okay, so just we found out these peaks in the case of pig, or in the case of paddy and rice, right? So we need to have a more like something like what Ambedkar and Gandhi said, and modernize from that. I mean, so that is what the crux of my thing is. Yeah.
Thank you, Rajiv sir, for good presentation. Now we start the question and answer session. Rajiv,
yeah.
Rajiv sir.
Yeah.
I think you have seen the questions. There are 3 questions here. Can you please go to the chat box and answer them?
Yes. Yeah. Public investors are not, public sector are not interested because, one is that this whole politics about this fiscal discipline, fiscal deficit. You cannot spend enough in the public sector should cut down, withdraw, okay, right? And private agriculture as a sector is always risky, right? So private sector is also is actually dependent on public investment. If public investment is coming down, private investment is also coming down, okay? So this is something that we need to look at, right? We need to invest enough in the agriculture sectors, and government doesn't want, because as long as you see the macro picture, 290 million tons. Of course, if you look at this pre-green revolution period, like say 1960s and 70s, we did not have enough production at the aggregate level, and we had to basically back down in front of United States, America, for PL 480 rice subsidies, so that we have enough rice grain for feeding. And now that we have this 290 million tons of food grain, which is actually aggregate level is a good number of good figures. So we don't care about what is happening in the Assam or what is happening in the farmer sector at the disaggregate level. So that's why my only request is, don't look at this aggregate figure. Don't look at this one nation, one market, right? If agriculture is doing well, so why is so much of farmer suicide happening? Why there is so much of distress even from the disadvantaged region like Northeast? Okay, so once we have this big production supply, this 290 or 300 million tons produced, which is equivalent to this thing. And again, there's also an issue. If you now look at FCA go down, they're still now struggling with a surplus stock, some 70 or 80 million tons, which they can now easily offload in the time of crisis. And if these FCAs are now food grains are distributed among the people, then whatever minimum income the rural sector people are earning, they can easily spend that income in the other areas, other non-farm sectors. But now that because again, transporting these food grains from Punjab and Haryana or FCA go down to Northeast will result in huge amount of transportation costs, which again government doesn't want to spend, because there is something called fiscal discipline, fiscal deficit. The government doesn't want to spend. No, this is fiscal deficit. But had we had a more disaggregated level, like say FCA go down in Northeast, Assam, and any other areas, then probably we would not have faced this problem to begin with, right? Farmers produce in Assam is procured at the end and escaping the Assam FCA go down, and they could have easily distributed. So this whole aggregate level, this whole model is wrong. Okay, and then what is the other? Rice cum fish. That is good. Rice cum farm fish farming, that's good. But then it has been cultivated by many farmers. Is there any drawback cultivating both in the paddy field? No, that's good. In fact, many states like even in Bihar and all, they are producing a lot of fish. Fish in the paddy field. And that's why now you see a lot of fish coming from Bihar instead of Andhra Pradesh that used to come before. And why not in Assam? So basically, government has to invest and take care of that local thing. Okay. And that is something that is not enough discussion on that. So what is that we have this FCA food grains coming and all, and we are getting these free rations. That's not going to revive the economy. Okay, only when these people in the rural area earn enough income, then only it will lead to the demand for the other non-farm sector within the economy, right? And that's what we want. Okay, and then
Okay, these three, I think.
Yeah, migrant labor creates some more problem in the agriculture sector.
Oh.
Yeah, but then again, this is again a very myopic picture. But then these migrant laborers are actually, I would like to say, they are refugees from the agriculture sector. They were to begin with in the agriculture sector, but then they are forced to leave agriculture sector, forced to leave, and they are now coming back. So I won't call them migrant labor. I'm going to call them agricultural refugees. Okay, they were in the agriculture, but they are forced to leave. So we need to take at this agriculture sector, look at the more disaggregated level. Okay, but then let me tell you one thing. Now we are talking about this taking on China and all these other countries, like very nationalistic and all. But then when it comes to spending enough for our rural sector, people who are most disadvantaged, who are these migrant labor? Most of these migrant laborers belong to ST, SC and OBC, more disadvantaged community. ST, SC account for 22% in our total population. But if you look at the migrant population, they are like 55% are coming from the ST and SC. They have a very less resource to begin with. They do not have any land. I mean, okay. So we need to look at it in a much more. If you're nationalist, I will call you nationalist only if you take care of your poor citizens, who are your fellow citizens who are forced to leave their villages, right? So for that, we need to have a more robust spending in the rural areas. Only then, me taking care of this, I mean, blocking the China app and like we're exporting to those countries where China has withdrawn, is not going to help until and unless we have enough robust demand. Okay.
Okay, I think these are the questions. There is no question coming. If anybody, one question we will take again.
Yeah.
Only one
Or
question.
if
If
anybody has any question, then you can post to
yeah.
people, and then people can pass to me also. Yeah.
Also.
Yeah.
Okay, no question. I think now.
Yeah. So it's pleasure.
Sir.
Okay.
Okay, over to you now.
Thank you, Vipul, for conducting these two technical sessions. Now we almost come to the end of this today's webinar. The last agenda, that is the vote of thanks. Before offering the vote of thanks, I just want to announce that the feedback link of today's webinar has been already given in the chat box. We don't provide feedback link in the WhatsApp because lots of people are actually they have registered, but but they are not participating in this webinar. So those are present in this platform, they will only get the link. So otherwise, we will not provide the feedback link in the WhatsApp group, because in the WhatsApp group more than 400 participants are joining, but here less than 100 participants are actually present. So we will not provide the feedback link in the WhatsApp group. Only those participants, those are attending this webinar, will only get the certificates. That's why we'll only give it in the that is called a chat box. So I request all the participants to go through the chat box, and the feedback link is already there. You will get the e-certificate immediately after fulfilling your feedback form, after filling the feedback form. So I now going to offer our vote of thanks to. First, I'd like to offer our sincere gratitude and solidarity to our principal sir, that is Dr. Vipul Chandra Bhuya sir. With his busy schedule, he spared some time with us and give us the inaugural speech, and also give a small light about the topic which we have chosen for this today's webinar. I'd also like to offer our sincere gratitude to our co-partner of this today's webinar, Majuli College Principal Sir of Majuli College, Dr. Devojit Soika Sir. He is very much active, and he is very much positive he actually positively responds us so far as the organizing this webinar. And I, on behalf of the organizing committee, offer our sincere gratitude to our respected Devojit Soika sir, who is the principal of Majuli College. I also offer sincere gratitude the resource persons that is Dr. Nayak sir and Dr. Rajiv Sutradhar sir. Although because of some technical difficulties, because of network issue, we have some problems when Dr. Nayak sir presenting his presentation. Although beyond this some difficulties, he is able to complete his presentation, and he's given a very informative presentation. Oh, hello. I offer sincere gratitude to Mr. Nayak, Dr. Nayak sir, for his presentation and for his active participation on the whole webinar. I would also like to offer our sincere gratitude to Mr. Rajiv Sutradhar, Dr. Rajiv Sutradhar sir. His presentation is basically very much relevant for agriculture of Assam. He gives it a very clear presentation. What is the position of agriculture of Assam, and how this agriculture scenario has been affected by pandemic COVID-19, as well as because of some government policies. So because of his very informative presentation, I would like to offer our sincere gratitude to Rajiv Sutradhar sir. Sir, we are very much grateful to you. I hope in the near future also we'll again join and we'll make some other program in near future. Thank you very much, sir.
It's my pleasure.
I'd also like to offer sincere gratitude to Dr. Rajan Chandra Neuk, our another joint coordinator of this today's webinar. As we already mentioned earlier, that this is a joint venture. This webinar is a joint venture of Department of Economics, HPB Girls College, and Department of Economics, Majuli College. Dr. Neuk sir is very much cooperative and very much positive to organizing this webinar. He make very important part to organizing this seminar by issuing by circulating this leaflet and all other aspects, and contact with the other persons. I, on behalf of the HPB Girls Fraternity, very much thank to Dr. Neuk sir. I also thank to the department head of HPB Girls Economics Department, head of the department, HPB Girls College, Department of Economics, Dr. Gokul Chandra Soikia, as well as the head of the department, Department of Economics, Majuli College, Mr. Rajan Bora sir, for their active help to organizing such a webinar. I also offer our sincere gratitude to all the teacher faculty of Majuli College as well as HPB Girls College for their help. I also offer our sincere gratitude to all the technical staffs behind organizing this webinar, particularly Mr. Sumit Sharma for his active participation throughout the webinar. And last but not the least, I would like to offer our sincere gratitude to all the participants. Those are attending this webinar not only from Assam, but also from the other parts of India. So I, on behalf of the organizing committee, we are very much grateful to all the participants. Those are attending this webinar. Although we have some technical difficulties in the beginning, but you are very much beared our problem, and all of you are present till last. So I, on behalf of the organizing committee, offer you sincere gratitude to all the participants. So I would like to thank all the other fellow people, those are behind the screens and help us to organize this webinar. With these words, I would like to conclude this vote of thanks speech. As we have already given this link in the chat box, if you have any problem, we just open this this particular meeting another 10 minutes. Those are already complete their feedback, they can leave, but just I can just announce that the webinar is over. Thank you very much.